You own the whole array. You own the hyperscalers plus the infrastructure layer. What from this week did you think? Do you agree that 650 billion is what we should be seeing from these sorts of names?
I think what we're seeing, and we've been saying this is the third year into, if you think about from the start of ChatGPT and where we are today, this is the third year into the build. And I would say this is the year that we should start to see adoptions. And in fact, I think that's what's causing a lot of disruption in the marketplace. We're seeing rapid model drops and launches of new models, new versions of it, and the speed of that is accelerating. And that is something that we should be expecting to see at this point. But what's also interesting is that what it also means, and we said this is an interesting time. The large cap themselves, they're spending a lot of money because it's as defensive as it is offensive, right? It's for growth, but it's also to defend your competitive moat. AI has the ability to disrupt many models, and this time it's interesting is AI holds the potential to disrupt tech, how we think about the way that the infrastructure layer is and how we think about enterprise software, how the traditional business model with high competitive moat, how that could be changing going forward.
Yeah.
And that's exactly what we're seeing. So it's kind of hard for us to judge, is 650 the right number or is it a different number? Yes.
Can I jump in and ask, where do you look for the evidence then? So, for example, Amazon talked up its backlog, which is very different from RPO, right, in the world of software, because it's not invoiced. They talked about, the operating income. A backlog would suggest, oh my goodness, they've got hundreds of billions of dollars of revenues waiting in the wings from their AI offering. But the market doesn't seem to believe that. Do you believe that metric?
I think it's less about whether or not that is indeed just that one metric that we focus on, but rather, if you think about all these, this is basically a rebuild of the digital infrastructure layer. And that's why I said, what is 650 billion? Is that precisely the right number we should be anchoring on? But just the fact that how it could unlock the future of workload. And when we think about it, it's not just the hyperscalers per se, but also what does it mean for the rest of the economy? What could it unlock in terms of potential in productivity? And you're actually seeing the early evidence of that. You can see in the traditional retail industry, what does the future hold for shopping? And what does agent mean for future of shopping? Or if you think about the traditional manufacturing industry, we are in fact seeing real productivity gain from using AI, and that's only the beginning. And time and time again, I think if we look back in history, when you have such disruptive technology changes, what happens in the near term, some of the way that we do things gets disrupted, but then new business model, productivity gain actually do emerge, and that is the power of innovation. It requires little imagination, so if you look at this point in time, yes, it's a huge number that we're spending, but you probably could look back, and back then when electricity was first invented, that probably was a tremendous amount of money to be spent on the grid. Right. What if this is the future of the grid?
Well, let's talk about, therefore, the innovation that we're seeing, Lei, at the moment. And I just want to bring to our viewers, of course, the latest that happened about midday yesterday when Anthropic released a new version of its AI model, Claude Opus 4.6. It's designed, we know, to carry out financial research, other work-related functions. The company says it can scrutinize company data, regulatory filings, market information, to come up with really detailed financial analysis that would normally take a person days to complete. This is after the market kind of fell out of bed following their legal plug-in to co-work. So how are you seeing these models becoming an entry point into software? What did you think about just the gargantuan sell-off across data services and software names?
It's in the time of such disruption, it's too early to call what's cheap, who is going to be the future winner, because this is only the beginning. And ultimately, it comes back to what is the real long-term competitive moat? And that's what the question really is at this point. Because, if you talk to the private companies, you probably are seeing some of the private companies, this is the fastest way for a company to get to $100 million of revenue.
Yeah.
But my question would be, what is the real way to look at it? Who can hold on to that $100 million of revenue for a long period of time?
Yeah.
And what we are seeing right now, what's interesting is it's not in the near-term numbers that's going down. But the question that we are asking, and I think all the investors are asking, is, well, it brings in the probability of what is the terminal revenue we should be paying? what's the terminal multiple we should be paying for the revenue? Because the probability of holding on to that revenue and the profit is probably changing really fast. And that's why we're seeing the terminal multiple actually is coming down pretty fast. And that's the disruption that we're seeing in the market today. But with disruption and chaos, there's always opportunities. Because on the other side of it is, while we are really concerned about, I feel like 6 months ago, everyone's concerned about the ROI. And now we're seeing models being dropped. And then in the meantime, there's a massive sell-off in the market. So I would think there's also opportunity as well. Because now we're probably a little more comfortable with the ROI. And then the $650 billion question for everybody is, are we building a road to nowhere? And I would say, well, maybe there's hope that we're building a road to somewhere. So it actually creates huge opportunities if you have long-term horizon, and because there's dislocation in the market.